If you've ever felt hesitant about a reverse mortgage, you're not alone. Most people who look into it and step back aren't doing it because the numbers don't work. They're doing it because the idea brings up feelings that are harder to sort through than a spreadsheet. So today we're going to walk through what those feelings actually are, where they come from, and what's worth reconsidering before you make a decision either way. If you grew up being told that debt is something to avoid, paying off your home was the goal, and carrying a loan meant you hadn't managed things right, that belief came from somewhere real. Consumer debt does real damage, and paying down a mortgage over 30 years to come out on the other side owning your home outright is something worth being proud of. So when someone suggests putting a loan back on that house, the resistance you feel makes sense. The question worth sitting with is whether the rule that served you well for decades is the right rule for where you are right now. A reverse mortgage isn't a consumer debt the way a credit card is. It's a way of accessing wealth you've already built on your own timeline and without a monthly payment obligation. That doesn't make it right for everyone, but it does mean it deserves to be looked at in its own terms. When you've spent decades building towards something like a paid-off home or a stable retirement, your financial decisions become a part of how you see yourself. Reconsidering one of those decisions can feel like it says something about you. It doesn't. Getting to a point in retirement where your home holds more of your wealth than your income can comfortably support isn't a sign something went wrong. For a lot of people, it means something went very right. So you invested in a home, you paid it down, and now that asset has real value. The only question is whether letting it sit untouched is the best choice for your life that you want to be living right now. One of the most common concerns people have is the feeling that a reverse mortgage means handing over control to a lender, that the home stops truly being yours. The best way to address this is to look at what the loan documents actually say. A reverse mortgage requires you to maintain the home and keep up with property taxes, homeowners insurance, and any other property charges, the same things you're doing right now and that you're responsible for right now. As long as those obligations are met, you have the right to remain in your home. There are no prepayment penalties, the terms are set at closing, and the non-recourse structure means neither you nor your heirs will ever owe more than the home is worth when the loan becomes due. Those are the actual terms of the loan in writing that you'd review before signing anything. Even when someone understands a reverse mortgage and doesn't have strong objections to it, there's often still a hesitation that's hard to name. When you've managed your finances a certain way for a long time, changing the structure feels like stepping off solid ground, even when the change could help. There's also a belief worth examining directly. The idea that protecting home equity for your heirs is the default goal, that whoever dies with the most equity wins. The problem with that framing is that equity you never use doesn't improve your life, and it doesn't meaningfully improve your heirs' lives either. Not while you're here. So a more useful question is, if nothing changes over the next 5 years, what does your life actually look like? And just as important, if a reverse mortgage isn't the answer, what's your plan B? For a lot of people, there isn't a clear one, and sitting with that question honestly tends to move things in a way that no amount of research on your own ever does. If you've looked into reverse mortgages before and walked away more confused than when you started, that's common, and it has nothing to do with your ability to understand it. These are complex products with a lot of moving parts. Different payout options include lump sums, monthly payments, and lines of credit, fixed and adjustable structures, rules around occupancy, property maintenance and loan obligations, protections for spouses and other household members. It's a lot to take in, especially when you're sorting through the emotional side of the decision at the same time. There's also a step built into the process that a lot of people don't know about. So before a reverse mortgage closes, borrowers are required to complete a session with a HUD-approved housing counselor who is independent from the lender. That counselor's job is to make sure you understand the product, the obligations, and whether it fits your situation before you commit to anything. It's a protection built into the program specifically so that no one signs something that they don't fully understand. If a reverse mortgage has been in the back of your mind and you haven't known where to start, the best next step is a conversation, not a commitment. Use the link below to reach to my team. We'll walk you through your situation, answer your questions, and give you an honest picture of whether this is something that could work for you. And if you want clear, straightforward explanations of mortgage programs and how they apply to real decisions, make sure to hit subscribe. My goal is to give you accurate information so you can make informed decisions with confidence and ultimately win with Wade. We'll see you next time.